I may have been just slightly too conservative in my targets for the US stock market this year. They have exploded. Let's have a look at that in today's video. Along with Bitcoin, time is running out. We got 3 days left to give us a signal that we're waiting for here at that 50% level. And I need to give something to the folks who are loving their altcoins. We got that coming up as well. Seen some pretty significant gains in the last 24 hours. However, we want to know if that changes anything. So you guys have been keeping your end of the bargain. We are getting so close to 300,000 before the end of the year. Thanks so much for that. Like and subscribe. You know the deal. You're at your home of macro cycle analysis. Hopefully you're here following and studying the past to forecast the future, as we have been doing every step of the way for months upon months upon months. Here's a quick one from May 1st, looking at the bear trap that was being set. This was way back down when the markets were much lower, about 8 months ago. And I think there was a bear trap set. Of course, everyone was expecting the markets to come down, and then, well, here we are. So let's kick it off with the overall cycle so we can drill down on how this information helps us for our Bitcoin and cryptocurrencies, and of course the stock markets and real estate as well. Now, a reminder, we are in the third year of the presidential cycle. We've never seen a recession in the third year, dating all the way back to 1929. Fair bit of data there to suggest that there was not going to be a recession this year. And of course, there's always going to be the folks that say that, well, it has to happen. Look at interest rates, inflation, what's going on around the world, the wars, energy prices, can't afford things, etc., etc., etc. I get it. I don't understand how things are this expensive and people are still affording it. It makes no sense to me. I'm just here to follow the chart and trade what the chart is telling me. That's it. I'm not interested in the other day-to-day things going on for my money, but for family and friends, it can suck. We can see that it's happening, right? But we're here to look at this in terms of the markets and how we can invest and make money from it. Next year, fourth year, there is a stronger case of a potential recession. But even though, does that even matter to the charts? We looked at it in yesterday's video here, where Germany went into a technical recession and now it's at new all-time highs. So that's all I want to repeat in this particular video. There has been a plethora of fear that's come our way in 2022 and 2023, and the prices are nearly back to new all-time highs. And as I said in the intro, maybe I'm a little bit conservative on my targets for the US. We have just seen it blow up in the last 24 hours. The news is going to point at all different sorts of things here. AI surge for Alphabet, obviously Google, that is AMD. Alphabet soars on Wall Street, cheer of arrival of AI model Gemini, etc., etc. Now, we've got mortgage rates as well that are falling to nearly 4-month lows. So remember, whatever we're fearful of at the time, typically it's going to flip maybe days later, weeks later, or months later. The main thing we need to focus on is the cycle. Which stage of the macro real estate and economic cycle are we in? And we're in the uptrend. Let's go that way. We're in the uptrend. So no matter what these analysts, doomsayers, the recession callers, all that sort of stuff keep talking about, look at the interest rates, look at the inflation, look at bond prices, look over here. It's essentially telling us, go over here, look over there, look over here, look over there. None of it makes any sort of sense. Otherwise, this should have all collapsed the markets much, much further than it did in 2022. I hope that's all coming together for us now, because essentially it's just all distractions. It keeps our attention in all different directions, and we basically miss out on what's going on. So we're starting to see these interest rates on the mortgages also begin to fall. That's reasonably substantial, going from 7.22 last week to now 7.03. And I know for myself, as I'm also looking at more home loans here in Australia, they're sort of sitting around high 5s, low 6s at the moment. You guys can let me know in the comment section how you're going with your searches. But essentially, we have started to see them creep back from the banks, not from the Fed themselves, but the banks are starting to compete a little bit more on business here. New US ETF launches set annual record. So there've already been 478 new ETFs launched in the US as this year, as of Wednesday, a new annual record. Now, I bring this up because the previous record was in 2021. 2021 was the all-time high year. That's the all-time high so far. You wouldn't typically expect to see ETFs hitting new records in a extreme bear market, in a collapse, in a recession, in all this sort of stuff that we've been told, because they are now producing more products because there is more demand from investors to put their money into the markets. That to me says bull market. So this is how I'm sort of reading through the news in my own way to hopefully stay on the right side of the market, because as I've said, I don't have a crystal ball. I'm just a dude here in my home reading the news and analyzing it the way that I see fit based on the information that I know and my experience over the last 17 odd years. The main thing I use is a cycle. So we're seeing ETFs rise. I thought this would be an interesting one for a lot of us here that are interested in Bitcoin, because of course we've got a lot of Bitcoin ETFs coming out in about 1 month's time. I think they're looking between sort of 5th and 10th of January for those release dates. So ETFs setting new records in the US. This brings on a lot of greed, of course, but as we know, greed can continue for a lot longer than we expect it to. And if we're just looking at the CNN model here for the Fear and Greed Index for the US stock market, then you can see that it's still sitting around 60. It has more room to climb to get back to those levels where it was in the July peak of this year. We also had a pretty significant greed reading in February, and we also had that the peak back then as well before the banking collapse, and then we went on that pretty mega rise from March into July. So there's still room to move on the greed index for the stock markets, and it seems like they are on that path at the moment. This has finally broken the July top. This was a huge gap up here where my big red arrow is, jumping to 4,635, and it brings it within 3.7% of a new all-time high on the S&P 500. So this is the E-mini futures. The futures market is almost 24 hours, so you'll get that reading much sooner. So we have to see what happens when the US stock market opens tomorrow. It is now Friday for me, and it's Thursday afternoon, Thursday evening for the folks in the US. So the S&P here, you can see it was sitting at roughly around 45.85. Yesterday's close on the E-mini futures, 45.85. So pretty significant gap up here of 1% after hours because of the news that we just looked at there with the AI stuff going on. So AI seems like it is a pretty significant narrative, and potentially it's going to spill over into cryptocurrencies as well if it hasn't already, with things like render and whatnot. So Nasdaq, 3.3% away from a new all-time high. It just took out the previous top in November, and we've definitely cleared, well, we have cleared this before July. Doesn't mean that this is now the new norm. It's just going to shoot straight up. I'm just presenting what is happening day to day. Macro speaking, I still see these markets going up much higher, but this doesn't just signal that we're not going to get a correction at this point. Just putting it out there because I don't have that crystal ball for the short term. I'm just looking at things for the longer term, and you can see just how well it has been produced for the longer term. As for the Dow Jones, it is now 1% away from a new all-time high. It was only yesterday that we were about 1.5% away from that all-time high there, just short of 2%. So it has jumped up relatively massively, closing in on this all-time high price. So as I've looked at earlier, even if there is a recession, just follow the charts. Forget the recession. That's why I brought this up earlier on. You know, we could see a recession next year, but at the end of the day, what are you trading? You were trading your money in the markets. You were buying ETFs, you were buying stocks, you were buying crypto and Bitcoin and real estate or whatever else. And the charts have been going up just purely based on the facts and the data here. If you could trade the word recession, I mean, I guess you'd probably still be losing money because it hasn't come out yet. The word hasn't come out. And sure, the government's changed the description of it all. Put that aside. Just focus on the charts, make life easier for ourselves. These other big arrows I've got here are significant events that have happened in the market along our wall of worry. This was the Russia-Ukraine war. This was the peak of inflation June last year. This was something else that the market was fearful of. I think it was higher for longer after Jerome Powell's speech in August. This one here was the banking crisis. And this one here was the most recent one in October. Again, for unknown reasons. You guys pick your reason. It doesn't even matter at this point now that we are 1% away from the new all-time high, which is essentially replicating the peak of January 2022, nearly a full 2 years later from that point. So this could potentially be on all of the markets, a potential accumulation zone in the bear market that the masses have missed out on. The US dollar is another piece of the puzzle that we've been following here. We did it back in September of 2022, almost within a day, and I was just basing this purely off the steep rise on the chart and then marrying that together with the market sentiment around that period. Within that 24, 48 hours, it was extreme bullish news. Everyone was posting about it on social media of how much the dollar had risen, and the pound was about to go to parity and break down, and the euro had gone to parity and it was breaking down. That was the hype at the exact peak. Then you had the exact low, well, pretty significant low here, a fake out, and then a bounce from that point. And around this period of March, April, the news was extremely bearish. Everyone's getting off the US dollar, get into gold, get into this, get into that. And again, forget the friggin' news. It just ruins people. And the market bounced from that point. Now we're on the way, we're on the breakdown again. And what we've been looking at in terms of a macro cycle, we expect this to continue down over the course of the second half of the real estate cycle. So I suspect this is just a matter of time before we start to break down the major 50% here, then those lows at roughly 100, then the false bottom here at 99.8 or so. The videos do encapsulate a lot of US data because that is where the cycle forms from. So a huge shout out to the Americans. Get on board. Let's go to the 300,000 before the end of the year for the US folks, and the Aussies listening to more of my voice than everyone else. Links in the video description for Bybit, BitGet, huge bonuses as per usual. But the big one here, if you're into the VPNs and all that sort of stuff, a Palau Digital ID could help you out with those KYCs and that sort of stuff that happen around the world. Otherwise, check out the free Crypto and Economic Report that'll be coming out again in a few days' time. On to BTC, and the greed is also extreme. We've got Bitcoin, we've got ETH, and for the lovers of Sol here, we had a daily short-term false signal. So yeah, we can get onto that one in just a sec. But in terms of the fear and greed index, let's have a review of this now. It's still at 72. So today is 72, yesterday was 72, and I think the day before was 72 as well. It was. So it's basically just been flatlining here at 62, while Bitcoin has basically been flatlining as well at around 43.5. Now, I've said earlier, we've got about 3 days to go. So about 72 hours before the weekly bar closes. And what's happened in the past at this 50% level is the first attempt has failed. You can see back in 2016, we had an attempt at the 50% level, then the halving happened, pullback, and then we attempted the 50% level again. So when it attempted it the first time, it did get a weekly close above it, but just 1 week. So we've got a bit of a false signal above that 50% level. It's good to see the market close above the 50%, but you normally need at least a couple of closes. Usually we like to see around 3. So we've got a false signal on the weekly, market corrected, halving happened, a little more of a correction here, then a reaccumulation before the market attempted it again, and then it broke out. So you can see it was hanging around the 50% level, getting a close just beneath, then slightly above, slightly below, and then eventually got the next lot of closes all above, and it never came back to that level. So that's 2016. What about 2019, 2020? Well, early on, huge pump up, and from this bar here, you guys might know it from your candlesticks, major reversal signal at the end of a move. So huge pump up and then a much lower close. So that's why I'm looking at the next 3 days to help us out with the signal here. So that got a close underneath. It just got a slight close above the following week, but really it was less than 1%. So for me, that's not enough to say that it's a confirmed move above the 50%. We had a pullback, lower high started to form, another attempt, less than 1% above the 50% level, which is the key level here to let us know if the market is ready to move on. Then fell again, lower highs kept forming, lower lows came in. The rest is history from that point. You guys know what happened there. Then we got something a little different. Not this time is different, but something in terms of how the market responded to the 50% level. So the rule we're looking for is the market to close above the 50% level and then start to climb from that point. It failed the first time. Second time was a little different. So like we saw with the previous cycle to last cycle, We got a couple of closes above here, and it remained around the 50% level and started to hang out there, putting in some higher highs and higher lows. Sure, there was a small little dump here of 12%, but the low came in higher than the other area. So good signs there. And then it eventually broke above at that point. So although it kind of, well, it did fail at this point here, the breakdown still remained higher. So that's what we're looking out for this time round for BTC. We are above the 50% level at the moment. The next few weeks are going to be the critical area. Potentially this is that move up that everyone is anticipating for the big news of the ETF. The ETF comes out and it just sort of flattens off from that point. So keep an eye on the closes. This is the critical part now for BTC. You can see that we're about 11% away from the monthly swing top. So this is the macro move here. This is a lower swing top that caused the bear market to really unfold at a greater pace, which means it is a key price level that Bitcoin needs to overcome. So it's in the midst now of two key levels. You've got the 42K 50% level and you've got the 48K first lower monthly swing top. Two extremely important levels that Gann used for all of his trading. And we are dead in the middle now, that at 45. Split the difference, 42 and 48, you got 45. And then how the market performs over the coming weeks after this ETF news potentially comes out in January. As you know, I don't have the answer to any of this ETF stuff. We've just been watching this really strong move over 8 weeks, marrying in all of the rules that we've been talking about here, the 7 to 10 bar rule. Markets typically have some sort of pause or correction after a strong move of 7 to 10 bars. So that could be days, could be weeks, could be hours. It depends on the time frame you're looking at. And that is another signal that the trend is moving to an end. The other thing that is showing up that maybe the trend is moving to an end is that we're starting to see a little bit of a pop off here with the altcoins again. But some of them are not getting back to those previous highs. The only one here that has gone through it is ETH, in terms of its dollar value. So it's had a pretty good run here and it's coming up to the lows of the previous cycle where the market collapsed into, bounced to its first lower swing top and then a collapse. So it's now starting to meet up at these lower prices. You've got a rough figure here of about 2,500 USD and then the 50% level there at 2,900 USD. ETH BTC also got a little false signal. I looked at this yesterday, looking at the potential breakdown of these lows here, and it just bounced, skyrocketed there. So it's probably on the back of some sort of news, but the same thing after the BlackRock ETF news, big pump, bang on 50%, and then lower highs, lower lows. So we've had a big pump. We're still at a lower high. We're still at lower lows. For me, it's not a big enough signal yet to get me super excited that this is the low forming, although I wouldn't be surprised if it was because of this previous low here in June, which has been very, very significant. There's not enough data yet, but at least the trend is slowing to the downside. Solana versus BTC. Little false signal here, so all the Solana lovers and those who say, why are you hating on altcoins so much? Go for gold in the comments section, what do I care? We're looking at Sol BTC having a little bit of a jump back into the zone. They're going to be happy because their portfolios are back to where they were back here when it first got into the zone, but it's still underneath the 50%. Yes, as we've talked about, it could continue to rally from that point, but when you start to put all of this together, if Bitcoin is coming to a bit of a pause here, it's gone on a massive run. You've got to appreciate that, down from 25K to 45K. Time may be running out in this trend. I am not at all calling for a collapse. Eventually you get this sort of correction. It takes time, days and weeks, as we've looked at in the past. Maybe that's all coming together now with the cryptocurrencies and they're going on their last little spur to try and take out those tops. The main thing for the altcoin lovers is they need to see the markets break those tops in order to continue on with their trend. Otherwise, this is essentially a distribution on a shorter term time frame. Distribution meaning folks are taking profits, and then you'll probably start to see it come down over the same period that Bitcoin will potentially come down. Potentially, remember, and ETH BTC, because as it leads up into that halving, maybe we'll have a little bit of a period that there is a pullback, okay? That's all I'm saying here. If you are making profits, good on you. Go and take those profits, do what you need to do with them, and enjoy the ride, because I think there is still a lot more to go in the altcoin space. This is just the beginning to confirm that altcoins are going to do their thing. As for the Aussie BTC prices, $65,500. I wanted to bring these up because we're getting close to those previous high prices. Aussie versus Ethereum, we're sitting at 3,500 with a peak out here of 36. And in terms of overall structure for Bitcoin versus the Aussie dollar, we've actually broken through those monthly swing tops. And from the all-time high, which was 93 odd thousand dollars, Australian of course, we're about 42% away. So much closer versus the Aussie and Bitcoin compared to where US dollar and Bitcoin are at. Things are looking pretty rosy at this point. Like and subscribe, guys. I'll see you back here at the next video. Until then, take care and peace out.